Hello traders, ladies and gentlemen. This is really the final task now, task 6. This isn't a task you're just going to be doing for a month. This is a task you're basically now going to be doing for the rest of your life. And look, don't worry, we are going to obviously go through all the VWAPs, but rather than saying this at the end, it's probably nice to get this out of the way at the start. It's the last bit basically. This is it. After this, really your journey starts. The education ends here at the end of this sort of little section, and then you begin the task. Do it for at least 1 to 2 months before you get on the simulator. You'll know when you feel comfortable. Then obviously you can start to get on the simulator if you want. You can get on the simulator earlier than that, but as you'll see, there's going to be a lot to take in here because there's going to be a lot of moving parts. Nothing you haven't seen before. We're just bringing in all the higher time frame VWAP. So you've seen the weekly. All we're doing is we're bringing in the monthly, the quarterly, and the yearly. Okay. So look, before I start, I want to say, look, well done for making it this far. Obviously, this is the last bit now. Pro section's over. I want to say thanks for giving me the opportunity to obviously share, my institutional experience with you and all the things that are going on in a professional environment that you may not have been aware of. And I really hope you found it useful. I'm always open to feedback. If you think there's anything I could have done better, things I did do well, whatever, let me know. Drop me a message. You'll know, those of you that have contacted me, I'm more than happy to speak to people. I love markets. I'm happy to discuss markets. I know that no one's the finished article, including myself. I'm always open to learning new things. So like I said, if there's anything you think I could have done better, I'm always open to feedback. I can always go and adjust things. And look, even though I said this is it, the pro course is over after this, I'm going to have some Zoom sessions. They might be a little bit sporadic because obviously I do, make my main income from the markets. And obviously, therefore, I like that to take my priority and focus, although this is really important to me. So obviously I will be conducting sessions, be it on Zoom or whatever the medium is. And if there's an opportunity to do it, I'll record it and obviously add to it. And over time, of course, if there's things I feel might be beneficial, I will add to the course. But as of now, this is it. Obviously in the future, firstly, it's been, as you can see, it's been an incredibly comprehensive, I hope you agree, piece of work that I've put together here. When I started, I did not imagine, in a million years that it would be what it's turned out to be. Me personally, from a personal and a professional level, I'm incredibly satisfied with how it's turned out. I always hold myself to high standards and I'm very satisfied. Albeit, again, caveat to that is I'm open to all types of feedback. Anything you think might help future students, please let me know. I'm very open to adding that in or changing things slightly. Just let me know. But yeah, look, thank you. Really appreciate you giving me a chance to share my experience with you and really giving professional education a go. And if you've done the retail education before, you know, I'm not going to speak about individual names, that's not my style. But in general, I'm sure you'll agree, the whole industry, in terms of the retail industry, it's probably not up to par, is the politest way to put it. And by no means does it mean doing the things I'm showing you that there's going to be guaranteed success. Of course there isn't, and I've been quite clear about that in the reality check, that even in professional environments the success rate is incredibly low, but the rewards can be potentially significant, so it reflects that. And it's the same as any other industry. So the reality is, really, the education was a big part of it, but obviously now the practice and then the screen time, thousands of hours you're going to have to put in to become comprehensive. It really starts now. So that's what I mean. This task is a lifetime task now. You're going to be doing this forever. The things I show you here. There might be minor things like the high, the low, the overnight high, the overnight low in the future. Potentially I'll just add them in, but it's not going to be the difference between success and failure. As you'll see, when I just bring the VWAPs in now, so I've got them here. Basically, guys, you've got everything, all right? I've put everything on a plate for you. There's nothing I'm using that you haven't got now. You've got everything. You've got all the order flow stuff I'm looking at. Essentially, cumulative delta is obviously my heavy focus. You've got all the VWAPs. You've got the way that I look at the VWAP, market condition, rhythm. You've got all the static stuff I'm looking at, everything, right? There's nothing, okay? Outside of what you see here, there's no secret thing that I'm looking at here, looking at there, that I'm not showing anyone. Guys, you've got everything, okay? You've got 100% of what you need to be successful. It's now the tough work starts in trying to bring it all together. So look, again, I've said it multiple times, but I really do, again, finally want to say a big thank you for allowing me to obviously share what I'm doing every day with you, and giving it the opportunity to see if you can actually make sense of it. But what I can assure you, okay, I can't guarantee that you're going to be successful. Of course I can't. What I can guarantee is that, you know, you're going to learn more about markets than you ever would have before. I'm confident of that. And B, what I can guarantee you is that you're looking at the exact stuff that the very best institutions in the world are using, okay? This is what they use, albeit on a systematic basis, algorithms, reading volume, or discretionary traders working in banks, prop houses, and other speculative institutions. This is all they're looking at, okay? There is no secret indicator and all of that. If you still think there is, just wipe that out of your mind and focus on this stuff and see if you can bring it together. I'm going to do my best now just to obviously bring in the final VWAPs and get you started on the push forward for the rest of your hopefully long and fruitful career. Or, you know, look, even if you recognize, do you know what, I know that, and I'm not trying to speak prematurely, obviously I hope all of you do make it, but there's no shame, okay, in if after doing this for a few months, for whatever reason, it just doesn't click or you're finding it difficult to put together, but in your mind and your heart of hearts, you know, this is really what's going on. It's just, for whatever reason, I can't seem to quite align it into the correct type of opportunities for me to take advantage of it. However, I understand it greatly, then there's no shame in that. You know, keeping your costs low and saying, you know, I'll try, maybe take a break from it if you're still struggling and you're really starting to get frustrated. Maybe take a few months off, right? There's nothing wrong with that. Don't let it affect your sort of well-being or get frustrated and think, oh, it's not working for me. Take some time off, come back to it, right? Or make an executive decision that maybe, now having seen what actually works in trading, I see actually this is a mammoth task I'm facing. I've given it my best shot. Maybe it just hasn't quite clicked, and I'll move on to bigger and better things, right? This is me talking prematurely. I'm not saying do that now. Obviously, give this a bash for the next several months. I'm just saying, because you might come back and watch this when you get frustrated, because you are going to get frustrated, okay? I'm going to be blunt with you. Even when I started moving away from the depth of market and looking at the market from a much more holistic, broader perspective, there were times where I was banging my head against the wall thinking, I'm just not cut out for this. Let me go back to the depth of market. Obviously, I was fortunate. I had that as a career. You may have a different career. You may think, let me just go back to what I was doing and focus on that. Nothing wrong with that, all right? If you're watching this after a few months of having tried putting everything together and you're just like really struggling, despite obviously speaking to me, getting help, whatever, it's just not clicking. Guys, you sometimes you've got to make the executive decision, right? You know, this is, life's too short, right? Hopefully you get it. Don't get me wrong. If this is the first time you're watching this, ignore me. I'm saying if you come back and watch this and you're just struggling, you know, don't go out and buy another indicator system. That's all my point is. Don't waste money seeking answers elsewhere. like I said, even in professional firms, the success rate is very low. And the reason can be for many of the things I said in the reality check and lots of things. But it can also be that despite your best efforts, sometimes you're struggling to put all those perceptions of value together because the market is incredibly complex, right? Let's be honest. I showed you on the PowerPoint slide how you've got multiple investors with multiple investment horizons, and it's incredibly complex. If you think about it, we're splitting it out into the day, week, month, quarter, year. These are just approximations. There's people who have perceptions of value for 2 weeks, for 3 weeks, right? For 7 weeks, for 9 weeks. Do you see what I mean? We're not going to be able to capture everyone, and that's why I always say to you, be loose. But for some people, it's very difficult to have that ability to be loose or to, somehow take into account all those different perceptions of value that tend to even be outside of this. So this is why I say, look, give it your best shot over the next 6 months. Do all the things that I'm saying. But if you're still struggling, whatever you do, don't buy another like sort of indicator or system or method, because look, it's not up to me. You can do what you want, and I'm not trying to tell you what to do, but take it from me, having obviously got being in a fortunate position of the incredible amount of experience that I have. It just doesn't exist. All right, this is what's going on in the market. It's market orders, it's raw data, right? You cannot deny that this is all there is. There is nothing else. You can go and look for something else. It doesn't exist. All right, this is it. Buyers and sellers, you've got to somehow manage to bring them together. And I'm just trying to help you to say, look, if at the end of this next 6-month process you get through the sim, you do this task, task 6, you get through, and then you do the simulator and you're just struggling and you're trying and look, this is all I'm saying. Make an executive decision to either leave it for a few months, come back to it. Sometimes it's amazing what a break can do, or no shame in just moving on. You're getting honesty. What other course are you going to get where someone says, look, if it just doesn't click, life's too short, focus on areas where you do have strengths, all right? I just happen to have like something that allows me to understand markets, but I'm hopeless at everything else. Some people are unbelievable at other things, and for whatever reason, it's not that they're hopeless, it's just that it just doesn't click in terms of this bringing this jigsaw, this puzzle of all these investor perceptions and aligning them. It's very difficult, right? So don't be too hard on yourself if you can't make it click. Keep trying by all means, but don't let it like ruin your life or anything, because I've seen it happen to so many people. They drive themselves crazy trying to get it, and then they become miserable, and then that's all I'm saying. Don't let that happen. That was a lot of negative stuff, but it's real, right? This is life. We have a finite sort of amount, and it's best to obviously balance that against trying to obviously achieve success in this. So look, I wish you all the best, and believe me, I will end it on a positive note, what I've just said, and that is that let's hope everyone doing this does make it click. All I'm saying is, if it doesn't happen, bear those things in mind, please, if you can, and just try and just be happy, right? Whatever happens, relax, be happy, and on that note, I guess let's crack on and get into some exciting stuff. So what I've got here, right? So basically, if you look in the chart book section, I hope you find this useful. I was trying to think of people who just have a small screen or maybe don't have much real estate, which is absolutely fine, okay? You don't need to go crazy. I always get people asking me, do I need multiple monitors? Do I need this? Do I need that? No, you don't. Absolutely not. You just need one monitor. That's the reality, unless you want internet or whatever. And do you really need that? It's debatable, right? I'll leave that for you to decide. The point is, you don't need it for trading. One screen is more than enough. So what I've actually done for you, as you can see here, I've put G7FX Stage 2 Final Chart Book. I've given you all, so you can have crude and E-mini. if you've got two screens and you want to watch both, fine, do it. But what I've also done, and I hope you find this handy, is I've done CL only and I've done an ES only chart book. So this is the final chart book you're going to get from me. It's everything that I look at. And what I've actually done, again, because now you've got, what have we got? We've got the day VWAP, you've got your market profile, right? And you've got essentially all the other VWAPs. So you've got, as you can see here, week, month, quarterly, yearly. What I've done is I've put them inside this, what do you call it, in the sort of main console of Sierra here. So you can just do window, and then I believe it's tile as grid horizontally. Yeah, there you go. So you can just have it as a grid, and then what a lot of people like to do is they'll just minimize that. So you can have on your one screen, you can have your market profile, you can have your day VWAP, and then as you wish, where are we? Do you see? You can just bring it up, the other VWAPs, whilst you're doing your analysis. It's up to you, okay? This is more for people who've got one screen, like I said. You can just keep this here, all your different VWAPs, your week, month, quarterly, yearly, or you can minimize it. Do you see what I mean? Once you've done your hypothesis for the day, and then you can just watch your market profile and your day VWAP, or you can even have, you know, your internet there, minimize, whatever. So I'm really trying to think of it being more practical for those with one screen, which is more than enough. Now I'm going to show you how I like to do it, and this is again maybe problematic for those who have a bit more less real estate. Please don't do what I do just because I do it. Do what suits you. There's nothing wrong with having this stuff here. So what you do is, what I do is I detach them. I like to detach, window, detach, okay, and then this one, window, where are we, detach, you see, and then window, detach, there you go. If you want to attach them back, you just go window and then detach, attach, you see, and it goes back in there. So I'm just going to go window, detach, all right. This is how I like to have it, and then I'll have my market profile there. I like to have it all on one page at all times so I can see what's going on. Okay, so what we're going to do is I'm going to market replay the last week. Okay, now let me show you, I think it gives it an air of credibility. So you can see, look, there's all obviously trades I've actually taken. So this was crude that I took on the 22nd. So that was Friday. So I got long of the market. So we can have a look at that trade. This was just some sterling stuff. This was sterlings. Then on the Wednesday I had some crude, so we can have a look at that. And then again I had some, no, that was ES on Tuesday, I believe. And then this was crude on Monday, where I had a decent crude position. So Monday, this was ES. This was Wednesday, CL longs. And then this was Friday, all right? So look, it was all done sort of very transparent. As you know, I am, nothing to hide. The point is this: if you want to go into the details of this, you can go into the history of the Discord, and you'll see during the futures prep, futures chat, obviously I discussed this in real time, in detail. Obviously, in the interest of time, because I want to actually cover the whole week of CL, and I also want to give you a week of ES, because it would be nice for me to give you both. Obviously, I will go through in the same way I have done before. But I thought it'd be nice for me to show you that, look, I did actually take these trades. I'm not just zooming through. It's just that, obviously, in the interest of time, I'm not going to sit here tick by tick. Otherwise, I just obviously haven't got the time. You'd be here all day watching the market replay tick by tick. So there you can see it in the Discord. I took those trades. You can go and have a look at the history, okay? Now what we're going to do is we're actually going to try and break them down a little bit. just by doing the market replay the way I have, where I'm just going to jump 12 hours and then we'll go back and we'll just go through them and actually show you how I brought in all the other VWAPs. So what I'll do is give me a moment. Let me do the market replay reset for a week ago. So I'm going to start on Monday at the start of this week. I'm actually shooting this on what is it today? It's Sunday. So let me go back to the start of this week, early Monday morning, and show you what I saw on all the higher time frame VWAPs and what I'm looking at. And you will see, all right? Yes, it takes time to put it together, but when I say don't overcomplicate it, I mean, I've already showed you, right? Whatever you've been doing on the day VWAP in terms of, look, keep it simple, market condition and rhythm. Even in your sleep, that's all that should be going around in your head. What's the market condition? What's the rhythm? Guys, that is all I'm doing on every single sort of investment perspective. All right. So let me start the market replay, and then we can talk about the different VWAPs, what they mean. But again, I will reiterate to you that it is literally just market condition and rhythm. And then obviously we're bringing in what? Static value, which is previous investors that have established value. And then obviously developing. All right, so give me a sec. I'll be back in a sec. Okay, so all I've done here is I've just done what I've been doing before, which is with the market replay. I've literally just gone to chart, replay chart, control panel, and then use start date time, and then here I've just started 5 a.m. on the Monday. Okay, so pretty simple. I'm just going to, as usual, I'm just going to go and check. So we'll do this together. I'm not going to merge all of this because we're just miles away. There's no point. So I'm going to leave all of that. Let me just undo all the merges. There you go. And let's just see from scratch what I would be looking at. Now, potentially, there's that, and probably all of this. You can see what the market's doing. They're just filling this in, right? So you're probably going to merge all of that together. Okay, so there is that. Probably would be merging those two. Again, as you know, with some of these, it's quite a grey area, but I think it's pretty clear here. You can see these three are merge profile, merge profile, begin, merge profile, end. So that's pretty solid there. I mean, it's not perfect, but it's good enough, right? And in fact, one of the things I do like to do is I will go and have a look at this area on my high time frame charts. So this is something I haven't shown you before. In fact, it's a good opportunity for us to discuss this, these high time frame charts. So let me just get the white background here, and I'll come back to this point about me checking this. Just get the white background. Right, so look, all we're doing, right, is we're just bringing in the different investor perspectives. You've already discussed and seen the weekly, right? So we've already seen this weekly. We already know, and we talked about it. It's like swing traders, basically. Okay, guys who are holding for 2-3 days. It could be anyone. Honestly, it could be prop guys. It could be hedge fund guys. It could be. There's going to be some overlap. All right, it doesn't matter. At the end of the day, like I said, they're going to hide their intent. We'll never know. It's going to be a group of people. We're just not going to know. So Typically though, it will obviously be 2 to 3 day guys holding for 2 to 3 days, swing trading, those type of guys. Like I said, it could be prop, it could be hedge funds, it could be anyone really. And then the monthly is more obviously asset management style guys who are doing quite simple, but obviously based on a lot of research type of play. Again, it's going to be swing, but it's going to be on much longer horizon. So and then also you'll get, you know, like the macro strategies and so on and so forth that I talked about with the hedge fund players, etc, etc. So, you know, sort of hedge fund, asset management, etc. And then here with the quarterly, it's going to be longer term asset management typically, and similar other players that fall into that category as well. So it could be real money pension funds, other types of wealth funds as well, that typically would be investing for, you know, long periods of time, maybe a month or so, maybe even longer. They'll be using quarterly VWAP and prior quarter as well. Don't forget, we talked a lot about this. Prior quarter in the sense that the static value, right? So you'll see on all of these, you've got, in fact, let's expand that. Hide this for a second. So in fact, what we should do is probably, let's just go through them one by one, right? So on the weekly, and I apologize, my face might cover this. Pull it up there. Can you see, we talked about this. Last week's VWAP comes out here. And look, this week we're interested in last week's sort of balance, which is here. Sorry, I beg your pardon. It's there, isn't it? And there. Can you see the band? You see the band here? Ended there. And therefore we're just going to extend it out, right? We spoke about this extensively. If you've forgotten, just go back to the last section, the weekly VWAP, and see how this is static and this is developing value area, okay? And I'm going to show you that it's exactly the same. This is why I say I'm being careful here not to go into a lot of detail about the fact that I'm introducing monthly, quarterly, yearly, because I don't want you to think, oh my god, it's new stuff. It isn't, it really isn't. Look, I've even colored them nicely for you. So here it's weekly. You only know it's weekly because it says weekly, albeit the stuff I talked about in one of the earlier sections where I did say in the same amount of space it's going to have a slight impact because obviously it's a quarterly, so there'll be that many more market orders. We already discussed that, but look, for all intents and purposes, it's exactly the same, right? You can see it here. Instead of it being that beigey color, look, it's exactly the same, right? Well, what's the difference? Here you've got the VWAP bands, first standard deviation from last month, and look what I'm doing. I'm just extending them out, okay? So here you can see we're in a rotation when it comes to static, but we're in a imbalance when it comes to DVA, right? So when you do your journaling or your hypos, which we're going to do together, you just have monthly DVA. What's the market condition? Imbalanced. What's the rhythm? Fast trend. Prior monthly value area. Return to value pullback, in the sense that we're in a rotation within last month's value area, static value area. Okay, it's the same stuff we did in the weekly, no different, except this is on a monthly. All right, that's all it is. So like I said, I'm being very careful not to just sort of regurgitate the exact same information that I've already done for the weekly, because otherwise you might think, oh, it's something new, and it isn't. It's exactly the same. All right, I've pretty much ended up deleting everything, so I might as well start again. All right, so that's the monthly, and look, I'll show you, it's exactly the same on the quarterly. You see, you can make this as complicated or as simple as you want. I prefer to keep it simple. Don't see the need to complicate this. Got exactly the same. Last month's value has now ended. Sorry, last quarter's, I beg your pardon, ended, right? at the end of March, the end of June, at the end of September, the end of December. This is the first quarter of the year, right? Where did we end? Here. Just extended it out and made that static. Okay, in fact, I'm going to have to move this up just so I can go through the sort of what you'll be putting down in your hypo, right? Think about it. Quarterly, right? This is your static, agreed? But it's your quarterly. Okay, so the prior weekly value area, prior monthly value area, it's just the quarter, right? It's just the quarter. Where are we? Breakout of value. Pull back, right? Because look, that's the first standard deviation. We're imbalanced. However, on the developing value area basis, on the quarterly, right? This is it. Where are we? Well, we're kind of in a rotation, aren't we? Look, we went imbalanced and now we're just rotating. However, we've got achievable targets above us, obviously. You've seen this, the value expectations. When you're in a rotation, where do you expect to go? The other side, right? So that's your target. So that's what I would put here. Do you see how you're just building up the picture? That's all you're doing. You're not doing anything different. You know, I know I keep repeating the point, but it is so important you understand this. You only know that's quarterly because it says quarterly. It might as well be the day. I understand. I've already said this to you. Do you now see what I mean in terms of real estate? Look, weekly can change a lot in this real estate space. Monthly will change a little less in this real estate space on your screen. Quarterly won't change much in this real estate space, and yearly will barely change in a real estate space in terms of market condition. That's because there's that many more market orders. That's all it is. It's just to do with computation, right? Putting that aside, the way that you're analyzing it, how do you know that this is weekly? Fine, I like to color it slightly differently, the bands, than here, but you can't tell the difference. It's only because I've put this in pink. This one I've done it in whatever color that is, and this one I've done it in like a beigey color. Look, I'm not great at colors. I don't know what that is. If someone recognizes that to be a different color, I apologize, but whatever, in my mind that's like a browny beige. And then this is blue. Had it not been, would you really know? If I hid that, right, let's say you see here where it's written yearly. What if I just scribbled that out and you couldn't actually see it, or I scribbled that out and you couldn't actually see it? You can't see this. You wouldn't know. That's my point. And then I scribbled this out and you couldn't see it. Do you see the same stuff you're doing? All right, here we're in a slow trend imbalance. Here, oh, that's a bit of a slow trend imbalance. You know, etc., etc. You're doing the same thing here. Whether it's quarterly, yearly, don't let that put you off. Keep it simple. And that's how you really have a powerful understanding of what other investors' perception of value is. Market condition and rhythm. Guys, they're just looking at the same thing. Where are we compared to the average? Are we above? Are we below? What's the rhythm of the market? You know, what's the volatility like? That's the rhythm, right? Do we have expansion? Do we have high volatility? Are we testing, you know, certain standard deviations? All of that. That's obviously to do with rhythm and to some extent market, and, you know, to a large extent market condition as well. But my point is they're looking at the same things, all right? And then you've got the static basis as well. And then finally, let's have a look at the yearly. Look, exactly the same thing. This time I'm just looking at last year. That's all I'm doing. That's last year, right? Where did we end up? There and there. Fine. That's it. Relative to where 70% of last year took place, where am I? Well, I'm imbalanced, right? I am imbalanced. This market is imbalanced compared to last year's value, static value. So when I do my hypothesis, I'm going to put yearly. Let's do DVA first. DVA is what? Normal trend, but then it broke, changed, right? So normal trend stroke attempt to change, attempt to, I'll just put delta change to a slow trend. Okay, that's a big clue that maybe this normal trend's coming to an end, and maybe we are going to either continue, or there's every chance we go back to VWAP and, you know, go back to some sort of rotation or value seeking within the bands, right? That's all that's happening. It's exactly the same as what you've seen previously. And then here, prior yearly value area, the static, what's going on? Well, it's a breakout of value pullback. You can put in balanced if you want, right? It's just that I did say to you here, when you're putting market condition and you've got like normal trend imbalanced or whatever, I like to just change the name when it's the statics to, as you know, the breakout of value. It's imbalance, but otherwise it gets confusing. This is what I was saying in the section where I was introducing this terminology, that's why I split it out, because otherwise I'd be having balance here and balance, it gets confusing. As soon as I see breakout of value pullback, I know it's relative to my static value. As soon as I know it's under the yearly section, boom, I know straight away I'm talking about where the prior sort of year has been, where are we relative to that. All right, that's it. Let's put it all together. Okay. So as I was saying, you've got, you know, the sort of, let me just drag this up. You've got medium, well, not even medium term, just sort of multi-day swing, right? So multi-day swing guys. Here you've got probably some hedge fund guys. Here you've got asset management, hedge fund as well. And then here, and even here, you'll have some asset management as well. In fact, you'll have a lot of both of these. So there's quite a bit of overlap here. And then there's real money. And then this typically tends to be the real money. Big guys, endowment, pension funds, wealth funds, big guys, right, who are not in the market more than maybe, you know, once every couple of weeks, if that, right? They're dipping in and out. It's not that they're not in the market frequently, it's that they may have one idea that they're playing out over months, so they'll be executing and building their positions very slowly. So they just might dip in and out once a week or whatever in clips, basically. All right, so that's what it is. If you think back to the PowerPoint presentation, you can see the overlaps here. So you're just having a feel for what these guys are doing, and then these are the sort of HFT to some extent. Obviously the HFT are going to be more on the depth of market, but it's really going to be the day traders and locals, as they're known, locals, right, who are just playing sort of the day. So you're bringing it all together. All right, so let's do that. Let's just do the hypothesis for today. So where are we opening up? Let's have a look. And I'll tell you what was going through my mind, possibly. And in fact, let me just get this rectangle on here. So what is that? That's 2. Okay, and apologies, I haven't actually put the point of control on here, but I should have. So what we'll do, basically, what I like to do is, I do like to start with the higher sort of frames, right? So I will start with the weekly, okay? You can do this in any order you want, it's up to you, all right? The way I like to do it is, and I don't really have space for the Word document, but you can print this out and you can just type it in the Word document, type it somewhere on your computer, write it down if you don't have space, it's fine. So the way I like to do it is I like to start with the weekly, okay? And I have the same thing in all of them. So hopefully you can see this. Look, it's going to be easier for me because I've only got one screen, right? I hope, forgive me if it isn't, but we don't have DVA today on the week. Because it's Monday. There is no developing value. It's Monday. It's one day. It's the same as this, right? It's exactly the same. So what I would be thinking coming into the session is that, so I'm just thinking the best way to, I told you I'm terrible at journaling, so I'm trying to think of the best way to organize it so it doesn't look like a mess for you. Right, so what did I say? DVA first, DVA not applicable, okay? Then I would have prior weekly value area. What is it? In fact, I'll tell you what, why don't we do it here? I hope you don't mind if I just do it, just thinking, should I do it in this space here? Yeah, let's do it there. Sorry about this. I'm just trying to make it as clean as possible for you so you can actually see. Let's do it here. So this is how I like to do it. Weekly DVA not applicable, right? Prior value area. Okay, so I don't even write prior week's value area because it's in my weekly section. And where are we? Breakout of value, pullback. Okay, so you can write a conclusion, but overall, I'm bullish. Okay, so I'm just going to put an up arrow. Just put bullish. Okay, that's my weekly done. That's it. Okay, how long did that take me? A few minutes. Okay, like I said, you can make it as complicated or as simple as you want. I like to keep it simple. What are we doing here? Again, we've got a problem ahead of us, but we've got space. But let's take it step by step. Sorry, I jumped ahead. So DVA, guys, you should be experts at the DVA. You've done this in like thousands of times now over the last few weeks that I've got you practicing in all the tasks. Firstly, would you agree we're imbalanced? We have not traded below the VWAP all month. Imbalanced. Market condition, imbalanced. And what's the rhythm? Fast trend. Bullish. However, I'm just going to write HR, which is however, sorry, I'm limited space, plus 2SD. What that means is we're 2 standard deviations up. We're quite stretched. And then in terms of prior value area, I'm sorry, it is a little bit messy here. Prior value area, what are we? We are in a sort of rotation, but with space. So actually it's quite bullish, isn't it? Because what we're doing, we're rotating within the previous month, right? And when we're rotating, where's the target? It's usually the other side. So return pullback, but I would say bullish, target sort of this area, right? So you can call it target the what do you call it? Value area high, static value area high. Quarterly, what's going on here? Well, you see, there's a bit of conflict here because we've got what's the DVA? Let's start with the DVA. Market condition is what? Rotational. What's the rhythm? You know, I would say that the rhythm, we've tested like the 2SD, 1SD, so I'm not going to make a note of it, but I'm happy that this potentially has some good opportunity to really go further because we've obviously been down here already. So as in we've tested extreme, so there's no reason why, having gone above VWAP, that we can't go and test the other extreme and maybe take out some of these stops that are above here. It seems perfectly plausible. That's what I would be thinking. Okay, rotational has space above, so quite bullish, and then prior value area, right? It is a problem, right? The prior value area is here. We're imbalanced down, so it's a problem. However, we've got a gap. up to there, okay? So if price was up here, I'd be more concerned about trading straight into my prior value area low, but it isn't, right? It's miles away. Prior value space to prior value area high. Okay, and then yearly. What you'll notice, guys, with a lot of this stuff, you'll be able to keep the same hypothesis for each one for a week, because it's not going to change much, right, as the week goes on. Okay, and yearly. So clearly it's a similar story, isn't it, to everything, really. I mean, we've broken the normal trend. DVA, sorry, my handwriting's terrible. Normal trend failed, okay. I know it looks like I'm writing a different language, but it does say failed, and possible slow trend. Or rotation. Because we don't know, you know, it could well drop off and continue the sell-off, but also the more time it spends here and builds value, it could just snap, right? So I'm happy to go with what this is telling me at the moment. You can see it's clearly telling you the market's bullish, right? Obviously, we need to tie that in with other things we're seeing in terms of our daily DVA, etc., etc. But to me, it seems either way. Okay, I'm happy with this. You saying potential slow trend to begin? We don't know because it's only tested it once. Potential rotation to begin because the normal trends failed. Maybe, yeah. I'm open to both. So, you know, you could say either here, really. I'm open to either. My point is, if my weekly, monthly, quarterly are bullish and my yearly says either, I'm open to it. Right? Do you see what I mean? It helps me. It's not telling me not to go long, is it? It's just saying we don't know. So that's very helpful to me. So that's those three done, right? Let's have a look at our... What I'm going to do is I'm going to keep these down here because I don't know how much they're going to change throughout the week. The CVAs clearly could change. So CVA, I'm going to put it up here. In fact, let's come back to the CVA and you'll see why. Let's do DVA first. And this is the day, right? So we've done weekly, monthly, quarterly, yearly. That's how I like to do it. What's going on? In my mind, I'm thinking there's opportunities for buying here because the weekly investors who've been trading this week, even though it's early doors, they came in, gapped up, as in maybe not gapped up, but they drove the market up overnight relative to prior week's value area. There's definitely buying coming relative to where weekly value was last week. Swing traders are looking to drive this market up. You know, these sort of short-term 2 to 3 days potentially are looking to drive this up. Monthly investors for the last, 2-3 weeks, what have they been doing? Buying. It's all above the VWAP. It's long. Potential opportunity for this continuation to happen, although we're at the 2SD, so I want to be cautious. Let's have a look at the quarterly. Well, look, it failed. Balance down failed. We've gone rotational. Take it up here. Well, look, we've been quite far down here, so I reckon we've got opportunities to go and test the extremes of value because we tested the extremes of value here. Had it been, you know, like this had only tested up to here, then obviously when it came there, I might not be so inclined to go far up. But look, it came all the way down. So what the market does in one direction, when it goes rotational, it loves to do in the other direction. Why? Squeeze, short squeeze, squeeze everyone. It's already happening. You can see it there, right? Squeeze is on. This thing's got legs. And if I'm wrong, who cares? I'll just get out, right? I mean, I think it's going to go up, so I'm going to buy this market, probably. Sorry, just give me 1 second. do like to clear up all the mess before I move on. Okay, so that is quarterly. Yearly, look, the normal trend broke. It's lending itself to a potential big move. Could go slow trend, who knows? But everything else ties in. So at the moment, in my mind, before I've even got onto my DVA, I'm bullish. Okay, before I've even looked at my composites, I'm thinking this market's going to go up. And you know, I've noticed a lot of people have been asking me before I've introduced this stuff, you know, but the CVA is here and this is here, and now you can see why, guys. I'm quite loose with the other stuff because I've already decided by looking at my 4 VWAPs pretty much direction. It's now just about fine tuning and making sure I'm not doing something silly like going straight into a heavy area of volume, or you know, something like a imbalance down on my DVA is a better way of putting it. A daily. Are we heavily selling off on the day intraday? Then I need to wait for that to get into my long intention. So let's see, are we? Well, no, overnight, what have we done? Accepted above CVA low, that's very positive. Acceptance greater than CVA low. What are we doing? We've built, look, what's the market condition? It's imbalanced, right? Imbalanced. Rhythm is kind of a slow trend. Okay. And so we've done market condition, we've done the rhythm. Let's have a look at our CVA. So I remember now. So what I said to you is sometimes I do like to use these higher time frames to see if the CVA is correct. Because you know I said that it looked a bit like it didn't look perfect, right? And I agree. We had some chunks missing here. But because the days were so close together, sometimes I know I've given you that little chart where you can check it on the RTH, but I'm going to be honest with you, I do actually like to look at it on, let's have a look where it's from. So it's earlier in the month, isn't it? Of March. It's actually quite a bit away. I do actually like to look at it on some of these longer term frames. Yeah, so you can see what it is it's this area here. It's this area here. So I like to eyeball it and just make sure that it looks all right on a price chart in terms of range. It's actually this area here. So I'm quite happy with that. Can you see? Basically, yeah, it's 31.17, isn't it? It's kind of like that. Can you see it? That's what it is. It's that. It's this range. So I do like to just sometimes go back, just double check. Does it look all right? Yeah, actually, that looks like a decent area of value that we've built. That's a volume profile. I know it doesn't look like it, but again, you know, I'm not an artist by any means, but you see what I mean. That is clearly a composite profile, right? There's a lot of value being built in that area, and again, even though it's not obviously been merged, and then yeah, so it looks to me like a very, very solid area. So I'll just get rid of that. Right, so hopefully you can see now why I was saying to you that it's really important you introduce this concept of return to value pullback from outside a composite. Because everything is pointing to long. Just because I've got this here, am I going to let it stop me? No way, right? I'll be honest with you. I'll be buying straight into that. I don't care. Yeah, I would scale here. But to me, if anything, that's a great opportunity. Because it's going to cause people who are using this as some sort of wall to capitulate. It's going to help me, in my opinion. That's my opinion. So look, I'll write it down, right? It's not my line in the sand. This is not going to be my line in the sand now. I'll be honest with you, my line in the sand is probably going to be my target really is this area, 32, be careful. I want to try and obviously get in before I really start testing that area. But this has got potential, I think, to obviously, I don't know what could happen here. It could just turn to mush. Hopefully it can go much further. Can't remember exactly what I did on this day. Hopefully I was buying, because otherwise I'm going to look a bit silly. But and I think I was. We looked at it earlier. I was pretty much buying. And in fact, let me just make sure that, because I do post my prep on here in the Discord. I just want to make sure I haven't made any mistakes on the day. So this was the 18th. Okay. Again, you're more than welcome to have a look at all of this stuff. There we go. Yeah, so I had that as a composite. Just get rid of some of this. So you can see this composite, I had it marked there, and I had this composite here, down here marked, which I'm probably covering right now with my face, but I had it marked. So fortunately I did, yeah. And look, you can see actually my hypos, they were all long hypos. Obviously we came in late, but they were all long hypos. And as I told you, my C hypo is where I get out, so the C goes down, but it was very bullish that day. So you can go and have a look at these if you want. This could be a few years after I've done that you're watching this. It's fine, you'll see other hypos anyway, but obviously I'll keep that in history. You can scroll back as much as you want. If it's still there, it's still there. If it's not, it's fine. It doesn't matter. The point is that you can see I had exactly the same hypo that I've written here. So, you know, it's not by any means a fluke. And as you can see, guys, I was trading 6, 7, 8 contracts long on that day. We're talking huge amounts of size long, all right? When I have a plan, this is my 90%. I'm going to be completely frank with you. When I'm this convinced about something, I like something, you've already seen. I'm not going to sit here being picky about order flow has to be perfect. The 5% has to be perfect. Obviously, I'm not going to, you know, buy if we're like, if the move goes like that and we're up here, like literally in one line and the market shoots up and we're way past the second standard deviation, of course I'm not going to buy it. I'm just going to be a little bit looser once I'm sort of convinced in terms of my 90%. And this to me seems like a pretty strong chance that we do go up. So what I'm going to do is I'm going to forward this, because I honestly haven't, obviously I know that I was buying this week, but I don't know how it actually happened. I have no idea. So let me just jump forward the 12 hours. Give it a sec. Yeah, perfect. So you can see what happened. We just shot up basically. Let's get rid of some of this. And actually what I should have done is my hypos, but you saw my hypos there, which were very clear actually. So let's just, let me just beg your pardon, just bear with me. Just going to move this forward a little bit. It doesn't want to comply. Just give me a second. Nope, it's because it's in market replay. It doesn't like it. I wanted to move it a little bit forward. When it's not a market replay, you just click that and you hold it down and it will move it in towards the edges. It's because I wanted the writing to be away. But that's fine. Look, all it is my hypo on this day, right? What would it have been? I wanted to get long. I said I want to break this. I just want to be careful as we get up here. So my A hypo coming into the day. Now, actually, we wouldn't be here, right? Let's be honest. We're going to be a little bit further into the session. But had we been here, right, it's probably better we do it this way. Had we been here, because look, to be fair, I hadn't seen this, right? I just did the 12-hour forwarding after I already started doing all the work. So let's just stick to where we were. Clearly, that's going to be my hypo A, right, to test this, and potentially to go further. My hypo B is going to be what? Probably we turn into some sort of rotation, but we go up. And I believe that's what I had, which I just brought down. Right? Once you've got your direction, the rest is fairly straightforward, okay? It's just applying a bit of common sense. I did say to you before that ideally my hypo A would be looking for some sort of pullback to get into the move. Hypo B is going to be less aggressive. In this case, I'm going more my hypo B to be rotational, and I'll tell you why hypo B has become the pullback, because we're not in a rotation. What's the likelihood we're in imbalance and we're going to go rotational? Very unlikely, right? So I'm being realistic. That's all I've done. I've put it as my B, and then if you saw, I put C as going down, and I said to you, I always do that. What could happen if I'm wrong? Well, it goes down. I'm not going to go short this market in a million years. Do you see now why high time frames are important? Because up until now, in particular, the first task where I got you to do hypos, what was I doing? I was saying CVA below is a breakout of value pullback, above is a return to value pullback, right? Guys, that's not what I'm... Do you see? I have no interest in a breakout of value pullback. Why? Look at my hypos. They're all long. I do not want to be selling this market in a million years, right? Look at the monthly. Do I want to be selling that? No. Look at the quarterly. Do I want to be selling against a strong rotation, which I think might go to the other side? No. Yearly could go either way, to be fair. Do I want to be selling against my prior value area? Where was it? Here, prior value area, bullish. No, I don't, right? I just don't want to be doing it. I don't want to be selling this market. So my C hypo is really, if I get long here or if I get long here, you know, I really don't want to be in this market if I get down. My C hypos tend to be where I don't want to be in this market. So look, hopefully that was clear. There were multiple opportunities to buy even later in the day once we built some value above the point of control. Do you remember what I said? 32, be careful. Once we built value above it, that's it. We're off to the races, right? It did end there. Fine. There was honestly nothing in the order flow to clue you into that. But in terms of entry, look, it's just beautiful, really. You can even see a little stop run there. Very flat delta, okay? And above zero, if you want to talk about, you can even put in CD at the start of the day. I was coming into my day and I said, look, let's just imagine we were there. The delta's bullish, right, guys? It's traded above zero, greater than zero. Everything ties in. To me, it's a buy all day long, right? And I know I put here 32, be careful, and I didn't go into it, but really it's just a return to value pullback is your expectation. Now, I apologize, guys. I hope the quality of this course has made up for the lack of my journaling and ability to write in sort of plain English. I am terrible, right? I can write, don't get me wrong, that's exaggerating. I just mean I'm not very eloquent in terms of putting things in a written down format. So it's kind of a little bit all over the place, but hopefully you get it, right? You know, this is an institutional hypo, okay? This is really professional trading at its, you know, I'm saying at its finest, but not because of me. It's just because this is what I learned being in an institutional environment and watching incredible traders and how they developed hypothesis. This is the stuff I'm saying. Look, don't think when I say trading at its finest, I've got an ego and I'm talking about myself. You know, I have confidence, okay? I don't let other people say to me, oh, but you should do this, you should do that. No, unless they can show me logically why what I've just shown you is wrong, I have no interest in all of that. I have confidence. You have to. In this game, you've got to pull the trigger if your hypothesis is strong. All I mean is by when I say at its finest, I just mean as the industry as a whole. Guys that are doing this, you know, this is what they're doing. Incredibly successful guys in proprietary trading environments and obviously in certain areas of the bank where they're employing proprietary techniques and they've got guys developing discretionary hypothesis, this is it. All right, guys. Whether they've got it in an Excel spreadsheet and they're making it all nice and neat, or they've got a amazing diary and a journal, or whether they're doing it like me, this is what they're doing. Okay, building a story. Right, I know possibly what real money is doing. I know what like the longer term spectrum of hedge fund and asset management is doing. I know what the medium term spectrum of hedge fund and asset management is doing. I know what swing traders are doing. I know what day traders and locals are doing. And to some extent, I know what HFT and so on and so forth are doing because I'm reading CD. I've just given you the entire universe of speculators, right? And to some extent hedgers and arbitragers as well, because obviously they'll be looking at this stuff, but they may not just be looking at it directionally, but they may be looking to get in the market at these opportune moments. So covered the whole spectrum. Hopefully that's clear, guys. Let's quickly move on, right? I'm not going to go obviously into that much detail for every single one. Let's quickly move on, and what I'm going to do is I want to get rid of this, but I want to keep the longer term stuff because some of it may still very well be valid on the next day. Give me a second. Let's just get rid of this. Don't forget, I do want to cover a little bit of a different market, ES, and give you a whole rundown using multiple VWAPs because I think it'd be very useful. So forgive me if I rush through this now because I was fairly comprehensive and it's really not going to change that much during the week. Right. So if we shoot forward, so we're not changing obviously here, nothing's to be merged, right? It's just a single day. Nice balance inside previous balance, albeit slightly bullish. Let's see what happened here. Again, don't forget, when I'm skipping forward so fast, it is going to be a little bit slow, so you'll have to just be patient with it. Don't do what I'm doing, which is being incredibly impatient. But this time I'm just going to shoot for the whole 12 hours, okay? See if it moves forward. It looks like it did. Perfect. Okay, so on this day, right, what are we keying off? Well, we're inside the composite value area. Are we still pretty much, is there anything we can add to our previous sort of hypo? So like I said, I start on the weekly, right? I'm looking at the weekly. Has my prior value area breakout of value pullback changed? No, it hasn't. I'm still very much imbalanced, okay? Now, look, I've got a key piece of information. Over the last 2 days, what are the swing traders, 2 to 3 day swing traders doing? Nothing. Rotational. Do you remember I put here DVA not applicable? Guys, incredibly valuable information, which I showed you in the weekly section, but we can now add it to our like overall, right? So rotational. What does that mean? It means I'm probably looking for long opportunities at the other side, right? So where am I? Approximately, let's have a look. 31, 33. So I know, right, in this region, I'm looking at potential long opportunities. It's rotational, right? Maybe I'm looking for short opportunities at kind of like 3250 area. So where's that? 3250. Problem is I'd be very hesitant to short here because what do I have? I've got a big gap up to here and we know this thing can just fly. That should be your expectation. Here as much change? No, we're still here. We're very close there, but we're in an imbalance up. So, you know, again, do you see the rotation environment makes sense to me here? Because I've got a problem above and I've got a problem below. Stuck. Rotational. Perfect. Here, tricky one. Very tricky one. Yearly, we'll come back to that in a second because I just need a moment to think. Yearly, nothing's changed, right? It's normal trend failed. Possible short-term, I can't even read my own writing. Possible short-term or rotation. No, I was exaggerating. It's not that bad. It is pretty bad, but it's not that bad. It's possible short-term, slow trend or rotation. Yeah, exactly. We discussed that. Prior value area either. We got a big gap up. So really, it's not giving me much information. Quarterly, again, I kind of like it up, but then we've got the first standard deviation there. So again, you know, it could be argued either way. So the whole day, for me, just tells me rotation. This is when I can start developing hypothesis. You know, if I'm coming in here for the day, you've got to see this, that my initial hypothesis might be something like that, right? That's my A hypothesis. It probably wouldn't even be as high as, sorry, as low as that. I might even extend it to the bands. But again, don't forget the bands wouldn't even be there. I may even be tempted to do that. That was my point. You know, make it potentially a higher. Now, yesterday I said to you I had a bullish sort of conviction. I'm going to be honest with you. I know that I wouldn't really be interested in selling this market. I'm going to be honest with you. Even though it sold off, doesn't matter. I would much prefer getting long, because the market is buying. We can see the market's long. It's got more interest in getting long. For me, this is me. If you think differently, I got no problem with that, right? We've already talked about this. That's why the market exists. Differences of opinion happen. It's fine. For me, this is very rotational. So I would be looking for long opportunities. As a hypo A, hypo B or C would, you know, at the end of the day, hypo B might be, what's hypo B? Probably it's going to be the same. It's just a rotational environment, right? At the end of the day, hypo B, instead of A going all the way up here, hypo B might just be up to here. Instead of all the way up to there, could just be up to there. Where my weekly is, probably is going to be there. But I don't want to be shorting here. Right? I can be honest with you. I don't want to short here. Even though delta's down, everything looks perfect, I just wouldn't want to short there. Okay? Because like I said, there's an upward pressure on the market. I'd be too worried that there's potential for these longer term guys to come into the market. Clearly they're not involved today, right? OTF, they're not in the market today. They're taking their foot off the gas. They've done their business yesterday. They're not in the market, all right? I can tell you, they're not in the market. It's as simple as that. These guys, they're not in the market. To some extent, swing guys might be, but not in size. It's just locals and HFT. That's it. You can see it a mile off. Honestly, you'll get better at this. As you get experience, you'll be able to see it a mile off. So they're not in the market. I would probably look for long opportunities there. Very difficult read using delta. I think that was really the only opportunity I saw on this day. If I remember correctly on the Discord, I didn't actually trade this day. But had I had, I think I would have been looking for long opportunities here for some of these shorts. Look, heavily short, get trapped. Simple as that. So yeah, that's it. Obviously, you can never tell. That's what I wanted to show you, what I actually did in the Discord that I did buy on, I think it was Monday. I wrote it down there. Wednesday and Friday. So I was buying the market, okay? I didn't just make all this stuff up. I was buying the market heavily in big size, as you guys saw. But I wasn't involved on this day. But if I was, being completely honest with you, I would be buying it here in this area with a view to these guys getting stopped, as in the shorts. Locals coming in and driving the market back up. I would not be looking for shorts in this area, even though it on paper looks like a great opportunity, just in case OTF came back in the market and just decided to do some late day buying or morning buying or whatever. It's just too risky. Okay, so hopefully that's clear. Okay, let's press play. In fact, let me just pause that a sec because that merged those two. Okay, and let's cut this. Guys, you can see it here. The market's building up now. It's really, the longs are coming through. OTF, and now, having taken that day pause, this is incredibly bullish. Right? There's no surprise I was all over this market this day on Wednesday, just a few days ago, as you saw. Now you can see why. It's incredibly bullish, all right? It's suicide to do anything else. I hope you can see that. It's suicide to sell this type of market. Yeah, you just cannot be selling this market. Okay. Hope you can see every single where you look. Right, this market is a long. It's really as simple as that. So I did some buying at the open. You can see why now, right? Just gonna go through our hypos again very briefly. Weekly has now changed. It's no longer rotational. See, a lot of these you can just kind of keep them and just pick up the next day. It's nice when you're there every day. You can see what the market's trying to achieve over the week. Clearly, buyers are in town this week. They took their foot off the gas on Tuesday. They were aggressive on Monday. Tuesday, they took their foot off the gas, rested, let some value build. Boom, key off that value and imbalance, right? Weekly was really starting to break there earlier in the morning. This is just continuing, isn't it? Look, sort of a fast trend. We've said it here already, fast trend. So really, and we've broken out of sort of the top of the sort of prior month value area. So we're doing what? It's like we're breaking out of a CVA high. We're breaking out of a P, well, it's M, isn't it? Prior monthly value area high. Same thing. Quarterly, similar sort of thing. We just kind of broke the rotation. And do you remember what I said? We went to one extreme. We've got potential to go to the extreme. This is a great longing opportunity. And lo and behold, what do we have? DVA, market condition, imbalanced, rhythm, sort of a fast trend. Right? Overnight. Guys, you're not going to get a better long than this. You're not going to get a better opportunity than this. If this happens, got to be all over this. CVA broke, up, right? See that? CVAL, CVA H, sorry, value high, broke, very, very bullish. And order flow, greater than 0. Guys, look at this. It's on a plate, right? It is on a plate for you to be buying this market. I would not be selling this in a million years. I don't care. Even if it goes rotational, like, no way. Right? I would not sell this in a million years. And really, that's it. I would just be looking to buy this market. I bought it in the morning anyway, and then obviously I just got out as it popped up. Straightforward day, guys. Really nothing much else for me to say on that one. Your hypo would obviously be some form of, I'm not going to draw them all because obviously I'm going to rush ahead, but yeah, it would be some sort of, long. Potentially the second one would be pullback and then long. Third one would be what? Fail and go down here kind of thing. And then obviously you could have a CVA if you wanted section, right? And you could just say this would be your line in the sand. 32, 40, stroke, really anywhere here. And I talked about this in the Discord a lot on this day. I remember now. 32 to 32.40. I said everyone's watching it. Huge area. And that's kind of your line in the sand. Breakout value pullback above. Expectation is for us to go up. and probably test higher targets. It wasn't meant to be, but that's okay. Plenty of opportunity to make money. You know, you're talking over 80, 90, 100 ticks, moves, right? This is swing trading at its finest, intraday swing trading. So hopefully that was clear. Let's move on. I'm going to move on at a fast pace whilst I just clean this, just so it can catch up with itself. Just get rid of some of this. You know, I said it before, order flow doesn't have to be about getting absorption or finding trap buyers and sellers. It can be as simple as markets going up, huge positive delta, buyers are in town. Fantastic information. Simple as that. Very strong order flow information. Don't always get obsessed with, oh, there was an absorption. It doesn't matter. Right, it's good enough. This is incredible information. We've gone up 5,000 plus 5,000 on the day. Or we're working towards that at the morning session. You know, we've gone above 2,500, working towards 5,000, potentially plus 10,000. We didn't quite make it on this day. That's okay, but we're incredibly positive, right? It's better than the delta being down here. Do you see? It doesn't have to be always the funky stuff. It can just be good old-fashioned. Buyers are coming in, and that's it. It's as simple as that. So I jump forward here. On this day. So let's see what happened on this day. I didn't actually trade this day. I didn't like the market. I felt, in fact, if you remember, I only traded on Wednesday and then Friday. I skipped this day. And there was a reason for that. I'll tell you why in a second. Let me just clear some of this up. All right, so in terms of the weekly, we were, if you look in the morning, so this is something you've always got to be quite mindful of. If you look in the morning, right there, do you see we were right up? This is what I didn't like about it. It was quite stretched. It was at the plus 2 SD. We're in imbalance, but look, it's very stretched, right? That's where we were, very stretched, plus 2 SD. So with this, I would have put plus 2 SD. So at the time, I just didn't like it, all right? The fact we're up at 2 SD, and then also, if you look where we were on the monthly, can you see it? Right there, pushing the 2 SD again. I don't necessarily like it when I don't mind if we pull back in, normalize. There, that's okay. I don't like the plus 2 SD. So at this stage, I just felt that it just wasn't right, okay? The market wasn't right. I didn't like it. Okay, that's just me. I did not like the market at that stage because we were so high. We were pushing up against the 2 SD. Guess, you know, it's at that stage I started thinking to myself, maybe, you know, this slow trend, because you got to remember, right, a lot of guys who have shorted here, as it comes up, yeah, it's failed, but that's why I said here, you got to be careful on the yearly. Either it could have gone either way, and I started thinking to myself, if I remember correctly, because don't forget, it was only 2-3 days ago, I vaguely remember thinking to myself, it's quite risky, right? And I didn't actually take the trade. So let me go and have a look, actually. When was it? It's the 21st. I'm just looking in the chat to see. Yeah, I did not trade on that day. I just didn't take it. Did not like it. So basically, yeah, it's overstretched, right? And then I wasn't trading in the afternoon. I'll be honest with you, I may have taken a stop out on this day. Who knows? I didn't actually trade it, but I might have tried to get long when we got into sort of more of a healthy area for me to try an imbalance. It's definitely one of those days. I'm going to be honest with you, around that area. 33. I might have tried to get long. Okay. I was just looking at this because I did say to you that even though we're at +1 SD, when it pulls back in, don't forget, we're now gone. Monthly would change here, right? It would be prior value area, breakout pullback. So we would put here prior value area, change that to a breakout pullback. Bullish target would be above. Okay, and the quarterly, it's not really gone imbalanced. I mean, we've broken out above the 1SD, but that's not enough, right? Let's be honest. It's just messing around. So as we pull back into sort of the one standard deviation, think about it, right? What's the rhythm here? Look, before the market sold off, what's the rhythm? It's the 1. Okay, now in the morning, we're at the +2 SD of the monthly and the weekly. Guys, see, you can see it for yourself. +2 SD, +2 SD. When we pull back in to sort of a normal trend or fast trend, which is the rhythm of the monthly, look, monthly, fast trend, rhythm here was more of a normal trend, wasn't it? So I need to put that in. Weekly, normal trend. Then, and where is the normal trend? Well, you're going to obviously mark this stuff. It's around here, isn't it? About 50, 60. There it's around 50. So I probably would be eyeing 50, 60. Okay, so let's go up. If I saw an opportunity, I don't know how I would have done this. I might have tried to get long there, okay? And I might have got stopped out. I don't know if I would have tried it again. Problem is, you've got this big gap here, right? It's a bit of a risky one. But yeah, I'll be honest with you, I might have got stopped out. I didn't trade on this day. I just seen what I'd written. I was quite busy. In the morning, I had no interest because obviously we were quite stretched. And in the afternoon, I was busy, so I wasn't around. And, you know, for all I know, probably knowing me, I might have been stopped out on this day. It's not a big deal, right? You can't win every day. So yeah, there you go. Okay, and then let's move on to the final day. On Friday, which I was buying, but let's just finish up with that day and see how we ended up. Sorry, give me a second to just clean this all up. Okay, so again, let's start with the weekly. On this day, coming into the morning session, what would you be thinking to yourself? Clear as anything. What is the weekly doing? It's in a rotation, right? It's not going anywhere. It's in a rotation. Market condition, it's no longer imbalanced, it's rotation. Right, normal trend, prior value area still breakout pullback, rotation down here. Very bullish, isn't it? You expect it to go to the other side. Let's be honest, this is incredibly bullish. No wonder I was buying this market aggressively on Friday. It's a very, very bullish market. Monthly, guys, we spent the entire period above. We're clearly imbalanced. The rhythm has changed, you know, no denying that. We've gone from a fast trend into a normal trend, but we've held. Don't forget, you're coming in after the market has held. And I remember talking about this in the Discord chat. You can have a look at it. I said, guys, these guys are going to get squeezed, okay? People who sold overnight expecting some sort of continuation, they're going to get squeezed. Right? You can go and have a look. I know I said it. These guys are going to get murdered. We've got short. Look at the delta. Minus 6,000 net contracts, right? These guys are all in, basically. You know, they've bet the house on this thing. I shouldn't even laugh, but they're going to get squeezed. And that's what happened. That's why I was very bullish of this market in the morning, and I was buying it. So again, monthly, look, let's be honest, its condition is imbalanced. It's no longer a fast trend. So all we can do is we can just adjust this and say, well, it's imbalanced. And what I would do is I'll put normal trend question mark. That's a question mark. Are we going normal? Who knows? Maybe. Plausible. We're no longer 2SD, so that's not a problem. And prior value area, well, we're on the cusp of it. So it's prior value area. It's not bullish. It's more of a question mark. Just keep an eye on it. Nothing really. Rotational, again, quarterly hasn't changed. Yearly, you know, the sellers tried, right? Do you remember I said this slow trend the day before? Because we were at plus 2SDs and whatever, I was worried that it might turn here as people like sort of longer term real money type guys. Look, it doesn't matter. I already said it doesn't matter who they are exactly. It could be a group of them, but whatever. I was obviously thinking they might come in. They haven't. Clearly, people have tried shorting. It's failed, right? It's obvious. It's failed. You've come in the morning. Big clue. Your line in the sand should be this area. You can have a look. I said it. 32, 32.40 again. Huge area. So look, there was nothing from there. Nothing from there. As in, sorry, nothing from the quarterly. Nothing from the yearly. So really, this is where I'm thinking. All right. Well, there's a good chance for the market to go up. How can I fine tune that? Is the DVA, the daily, allowing me to do that? So developing value area is condition rotational. What's the rhythm? Well, look, we've gone plus 2SD, so why can't we go 2SD the other side? Okay. This is why I was quite aggressive in the morning. I think I was expecting us to push a lot higher than we did. And you'll see, I believe the last position I did get stopped out of here, but I had quite a lot of contracts that I managed to take good profits on. I mean, we're talking, you know, a good 40, 50 ticks that I got out of the market before getting stopped on them. This caught me out a bit, as in I didn't take a heat or a loss on it, but it just was, you know, oil being oil. And then once we went back above, that was it, right? It was business as usual. Oil does this. All markets do it to some extent. You can see it was a stop run. Delta's fairly flat. Held the minus 5,000, but price has breached and we went back up. But look, the daily, the DVA was rotational. The rhythm was, you know, kind of a plus 2SD. And then in terms of my CVA, you know, I either could have targeted it from inside, but I was up here. We had a nice breakout value pullback already in play. Okay, so my hypothesis clearly A, or maybe that would have been my B, as in straight up. A, obviously I do like, as I said, the small pullback and then up. So that could have been, sorry, that would have been my A, B, and then C, as you know, I like to do the ones that fail. So if we start to come back down below here, I can't remember exactly what I said, but I presume I might have been talking a lot about 32 to 32.40, that, you know, if we start to build value below this area, I would be getting exiting. So that would have been my C hypothesis, right? Guys, look, I know it's not easy, right? So that's done. We're done for the week. I'm the first to acknowledge it's not easy, right? Of course I know it's not easy. it's taken a long time for me to be able to put all these moving parts together. It is a lot of moving parts, but there is no other way, okay? This is what the market is doing. You've got different players with different perceptions of value. There is no indicator, all right? I know some, not all, with all due respect, I know that a lot of you get it, and you're like, fine, I know there's no indicator, I'm just going to have to figure this out. But I know some people will be thinking, there must be an easier way, there must be something that tells me. Can you see why it doesn't work, right? All that stuff, it does not work. How can you have an indicator that tells you what real money guys are doing, what hedge funds are doing, what asset managers are doing? What do you think it is, a crystal ball or something? No. These guys are real people making investment decisions, right, based on so many different factors. The only way you're really going to be able to get inside the minds of them is send a survey individually out to millions of people. You can't. What's the next best thing? See what they're doing, market orders, transactions on their particular sort of perspective, and then bring it all together. And it is incredibly hard, but what else is there? There isn't anything else. You can do your algorithms on your microscopic time period, like on the depth of market, but again, you've seen the competition there. These HFT houses are spending millions, if not tens of millions, hundreds of millions. I mean, silly money, right? This is really the only thing that's going to allow you to beat the machines, is bringing all of this together. So I hope that was useful. Let's quickly look at ES, right? And then that's it. And then obviously we'll do videos, we'll do Zoom stuff. Don't worry, we're going to do loads more of these. And whatever I get an opportunity to record, I'll obviously include it in the section. Hopefully there'll be lots of other sort of examples for you. But obviously we'll see how that goes. There's plenty here for you to be going on with. Let's quickly do ES, then we can end the session. Thank you. Okay, so I've loaded the E-mini here. We're going to do the same sort of thing. Market replay, and actually I've put this chart book for you, the same thing, so you can see here, like I said, if you've got not much real estate, don't worry, it's not a problem. You just have your sort of yearly, quarterly, weekly, monthly VWAPs. I've put them in the window nicely for you. Like I said, I like to take them out, so for me I will detach them. So there you go. But if you have it out and you want it back in, it's just that, okay? And then, if you've got this sizing like that, just do window, Tyler's grid horizontally, okay? Or vertically, or whatever you want. And then if you want to change these around, look, you can move them around, etc., etc. And that's obviously gonna probably the same as in your retail platform where you've got trading windows, right? But there you go. So what I'm going to do is I'm obviously going to take these out. So I'm going to go window. So you can see it's the ES only chart book, right? Window. Don't forget, if you're doing market replay, you want to remove anything that you're not using, all right? So it could be that, for example, you're not using the letters, TPO, get rid of it. If you're not using the grey chart to see balances, get rid of it. But should be okay. Basically, I've only left the ES stuff on here, so you should be alright, because there's no crude oil, right? So even if you don't do that, you'll be absolutely fine. I don't know what I'm doing here. I was trying to talk and detach windows at the same time. Okay, so sort this out. And then one more. Alright, so that's how I like to have it. Like I said, you don't need to do it the same way as me just because I am, but this is how I have it. Okay, I like to just have it up all the time in front of me. It just makes my life easier for me. But if you want it the other way, it's also pretty good. Then you can have, obviously, as I showed you, can have more real estate, especially if you've got a smaller screen, to just have your DVA and your market profile. And then you can have these just within the Sierra console, as we said, within here. Okay, so what I'm going to do is I'm just going to do chart, replay chart. right? The usual. And I'm going to go back to Monday, and I'm going to hit play. And then obviously my live account will switch to a sim account, so it might prompt me as it typically does. So yours may not do that. It may just press play again. So small point, really doesn't matter. The point is, set the date to whatever date you want it to. The time about 5 in the morning is quite good, and then you can forward it up, or you can do 8 just before the open, which will give, if you're doing it in real time speed, do it about 7:38 or 8 o'clock. It'll give you time to do some prep, etc., etc. Even 8:30 is fine if you want to just trade the open first couple of hours. I'll leave that to you. So I'm going to hit play. I'll be back in a second once it loads it up. All right. Okay, so I've reloaded this back to Monday. Again, we're going to go over the week, this time looking at all the time frames, or horizons, as I would rather say, investment horizons. Now, I have to admit, one thing I noticed is when I was running this, something didn't seem right. The daily, it wasn't moving on the market replay. And I've just checked the documentation for Sierra chart, and actually what it says in there is that, because what it is basically I use historical data, right? I can use intraday data for the day, but what that does is it will build it up, right? Rather than just using the historical data for the day, which I find to be much better because, I'm going back 800 days. I don't want it to use granular data. It's just going to slow my whole system down. It's going to do it slowly. So you got two choices, right? You can either, if you're just doing recently, like the last few days, don't bother changing it, all right? The daily, it's not going to move much, right? Because you're looking at market condition, and it's barely going to change, okay? In fact, it's not going to change. It's hardly going to change. So if you're just going back, like I am, 3, 4, 5 days, don't change it. But if you're going back a long period of time, try it. Basically, it will obviously be slow things down a little bit, but what you want to do is you want to go chart settings, and you want to change this from historical chart, and you want it to load the intraday chart. And then here you can see days, minutes, seconds. Make sure that's set to 1 day. That will load it up as a daily chart. Hit OK. It will then have to load 800 days of data. All right, so I'm not going to do it now. I'm just going to leave it as static because it doesn't make a difference. I'm not going back 6 months or whatever and looking at the day. But if you want your day to move in sync with everything, like I said, just change historical to intraday. All right, historical's fine. It moves in real time. It's just that the previous data, it's not built up, obviously, using ticks or minute data or whatever is set to do. Just essentially, you want it to be only doing that if you're doing the market replay. And you want the market replay day to move fast. But honestly, it's not going to make that much difference. Mainly, I'm looking at quarterly, monthly, weekly, the day. If it causes your computer to go too slow, just stick to historical and leave it at that, and just obviously eyeball it what the market condition is at the time. So if you're here, you can see it's imbalanced. If you're here, you can see it's imbalanced but overstretched, 2SD. Obviously, if you're here in this area, you can see that the sort of imbalance, the normal trend imbalance, that's the fast trend imbalance. The normal trend imbalance broke there, and therefore, at least on this perspective, from this perspective, obviously a lot of the big guys, real money and so on, they're going to be getting out. They're going to be bailing. You can see it here. You don't need the data intensive market replay process to play all of this. Try it. If you want to do it, like I said, I want everything to be complete information. That's the only reason I'm telling you. I apologize, I hadn't noticed it before. I just noticed it now that actually it wasn't moving. Like I said, I checked the documentation, and they does say in the documentation it's perfectly fine to use this. And I used to use this as an intraday chart, but it used to slow my thing down so much. Then I switched to historical chart, and it's made it better. It's exaggeration. It didn't slow it down so much, but it was, it was slow. So yeah, if you want the market replay to be accurate for your day, then again, one final time, change it to intraday chart. Just make sure the days is set to 1, hit OK, then start the market replay. Then this will be perfectly synced with all of them. If you're not too fussed like me, I really don't care. It's not going to change much. Once you've nailed that market condition, it's going to be the same for like a few days at least. I'm okay with you not doing that and focusing more on these 3, composite, day. You got plenty anyway. It's up to you. See how slow it is for you. If it causes things to be too slow, then don't do it. If it's okay and it runs at a normal pace, do it. Try it, right? For the purpose of this exercise, I'm not going to do it. Maybe in one of the future videos that I'll put down later, we can have a look at that. But for now, it's totally over the top for me to be doing that, for this to be changing. Because you can see, look, all week, we've basically been in a rotation, right? That's not going to change this whole week. So I don't need to do it. It's just going to be a waste, and it's going to cause my market replay to go a bit slower than I ideally want it to. And don't forget, I'm recording, so doing a video, obviously time is more limited than if you've obviously got that extra capacity to mess around with it, etc, etc. Obviously I want this to be as smooth as possible, and it will bog it down a little bit, so hope you understand. And it makes no difference really. So look, you can see it here, real money guys. Here the DVA is what? It's rotational. What's the rhythm? And I am going to start at the weekly. I'm just saying that, look, this isn't going to change, is it? Rhythm is like 0.5, 0.5, if that. You know, market condition, rhythm, and then prior value area in terms of the yearly. Where are we? Perfectly rotational. Return to value, pullback, which is rotational essentially. So it's not really telling us much, right? Apart from that, it's balanced. Now, I'm going to be honest with you. When I looked at this during the week, that's the advantage of me doing market replays that have just in terms of just recent time, because I can remember what I was thinking at the time, and that was that this had failed, right? And that was an important clue. Basically, this had failed. The normal trend had failed. Even the sort of slow trend hadn't even been attempted. To me, that's quite big information that the shorts, they're probably just not there in the numbers that we thought they were. So if anything, this has potential just to go to the other side of value. And don't forget, on a, so let me show you this, on a day time frame, that's a big gap. All right, guys, you've got to understand that. You know, if I think there's potential, even that, just to value expectation is what? When we go rotational, is static. This is developing. Both have gone rotational. Is to go to the other side of value, right? So you can scale here at VWAP, but we're holding. Nothing wrong with going to the other side. And my point is this: look, guys, you're talking a huge move, even from here to here. You're talking a huge move. You know, 34 points, right? It's, I mean, huge is exaggerating, but it's a chunky move. All right, so plenty of room for some upside. So if anything, I'm slightly rotationally bullish, if that word makes sense. But look, if you're rotational, that's good enough. Obviously for me, I'm slightly more bullish than neutral, which it would be normally in a rotation, because there's still space to the target. So what we'll do, let's start off the way we did before, where we were just let me make a little bit of space here, where we were just doing the weekly upwards. So look, all of my sort of bias for the day, it comes from the high time frame VWAPs. Gonna be blunt with you, it's not coming from the composites like I was showing you before. I did that because I wanted you to develop hypotheses on a basic level, right? I can't give you all of this, it would have been too confusing. I'm looking at 2 perspectives of value here, 2 here, 2 here, 2 here, right? That's 8. Then I throw this in, right? It's 9. You know, and then it's here, 10, and then even to some extent, I'm using volume profile here. You know, I like to have profile here, there's profile here, there's obviously the individual profiles here, so you're talking a good 12, 13 perspectives of value. It's incredibly complex, doable, but obviously it's a bit of a weave that you need to put together. So that's why I got you started on that. Now look, you don't have to have these profiles showing. It's up to you. I like to have them there, but you don't necessarily need to have them there. All right, so you can if you want. Let me show you. Go to F6 and you can hide it. Apply, right? And it's not there anymore. Some people find that cleaner. You know, you can see that it's very clean, nice and clean. Same here. Hide the. Do you see? It's quite clean. It's up to you. I like to have it there, so I'm going to leave it there. Totally up to you. I can't. You know, there's no right or wrong. I think it's perfectly good either way. It is a little bit cleaner, isn't it? But I don't know. I like to have it here so I can just see where the bulk of volume was for the week. For me, it's quite useful. So what I'm going to do is I'm going to do the hypothesis like I did before, weekly, right? DVA, we know it's not applicable because it's the start of the week. There isn't really anything. Let's have a look in terms of value area. Prior value area, we're very much inside. It's rotational, maybe some about 10 points of space, right? Up to there. You can even see, look, we've been in a decent rotation. I think there's space there. If we break out of here, then obviously there is room to kind of just test the recent highs. But don't know. At the moment, it's a bit of an unclear picture, isn't it? You could say argue either way, to be honest. And if anything, you'd be more inclined to just kind of be neutral because we're still well within the prior value area, prior week's value area, right? We're in. Sorry, I got the wrong areas there. Apologies. Here, you can see the standard deviation ended there, and there we go. It's kind of that area there. So yeah, let's do it again. Weekly DVA not applicable. Then we've got prior value area. So this is the weekly prior value area. Static is return to value pullback. That actually says careful because we're so close to the top end of the value area high. Value expectation has really been met, right? Let's be honest. So it depends on a lot of what's going on here. Monthly, let's have a look. I do sometimes like to just do this so I can just see what's going on. It's in a rotation, right? Let's be honest. So actually, there's potential. I think I'm going to write it here, but I'm also going to write at the bottom, right? Because the range is a bit smaller than it was on crude, it's probably easier for me just to write out twice. So monthly is, in terms of the DVA, right, the developing value is rotational, but rhythm is plus 2SD. So in my opinion, okay, we've hit this area, but if we can retrace, there's definitely potential to go to the other side and squeeze, short squeeze, which has already started, but it's really starting to motor. Look at that. You can see that, right? That's a lot of volume in one bar. Big amount of buyers have come into this market overnight. And then this is what's really crucial. Prior value area static. Look, previous weeks, we weren't able to really hold below it, were we? So we broke and we started to obviously probably build a little bit of volume in that area, because don't forget, this is a quarterly. So on a monthly or a weekly basis, it's going to be a lot of volume in that one candle. In fact, I beg your pardon, is a monthly. So even on a monthly basis, it's going to be a lot of volume that's built on a day or on a week. Okay, so even though it's just one candle on the monthly, it's going to be a decent chunk of volume within there. So monthly was there, and in fact, let's do that. Let's write this down. Apologies, I'm going to have to get rid of this. Weekly, monthly. Again, just keep it simple. Just do your market condition rhythm. This is why I'm doing this exercise, to show you that I'm not doing anything different to what I was doing here. It was the same thing, right? So what do we say? Rotation, clearly rotational. Rhythm is plus 2SD, some space, question mark, prior value area. Right, what have we done? Okay, now, so potential is still very early, but potentially breakout value pullback. So put that and that together, and you've got the murmurings of a potential bullish move. It's still very early. Like I said, the weekly, we don't have a DVA, but in terms of what's going on, we want to be a bit careful. That's why I've written it careful, because of what? Prior value area high is in the way. If we can smash through that, sort of this area and start to really build, potentially that does line up quite nicely with the monthly. Now, I do remember looking at this actually during the week, and I think this is what really got me thinking that maybe this is gonna go and test that sort of higher area within the monthly that we just looked at because of this rhythm. Right, very clear slow trend, very, very clear slow trend, very, very clear sort of distance that the market was trying to reach, this sort of region, 2960, which kind of aligns itself to the, didn't mean to do that, kind of aligns itself well to what's going on in the monthly. This is how you're starting to put the picture together, right? I talk about this all the time. Guys, incredible edge. What machine is going to be able to do this? What algo? No, none. See, we're thinking already, question mark on the monthly. Do we have some space up to there? To cause this short squeeze? Well, actually, we're just saying here, we've got this sort of rhythm with space. It's exactly the same. Ties up so nicely. So you can see this is why I do this. I go through this process so I can start to develop some bias, which I can then use my composites and DVA to fine tune. So DVA, very much a slow trend, isn't it? And you can put it here, prior value area. Sorry, here, so slow trend, and then prior value area. Look at that, guys. Return to value pullback, right to the other side. Huge amount of room. So to me, that is telling me this market has no interest. At the very least, I'm not going to be shorting on this day. I already know after looking at weekly, monthly call, I'm not shorting today straight away. And then yearly, I apologize, it's not moving because of the aforementioned issues. But look, it's just in a rotation. All right, there's nothing to it. There isn't really anything it's offering us. Rotation, maybe that small gap I talked about to the prior value area high. Small gap. Sorry about the writing. Put this all together. It's just one way, right? Whether it goes sideways or up, it's just not going down, in my opinion. So we'll have to see what happens. Now let's just do the composites. Let's get these out of the way. So clearly emerging those three. Where are we? 2891. There's a bit of a grey area. So look, I wouldn't merge these 2 days, but I just want to see what the market's doing. Yeah, look, if you can see it here, right? What's actually happening is this market is just filling in. So for me, I would merge these, and honestly, it's very subjective. Like, it's quite grey, that one. It's just because I merged the 2. If I merge the 3, you can see it does actually form quite a nice profile. But honestly, if you didn't, it doesn't matter. I don't even know what I did on the day earlier this week, and I did post my prep in the Discord. There's every chance on those types. It's a bit of a grey area. It's only because I merged the 2 and I realised what they were doing. They were filling it in. Let me see if I can actually find it here on the Discord chat. I believe it was the 18th. That's it. Yeah, did I? Yeah, I did merge them. Okay, yeah, you can see I merged it. I did merge it, so yeah, that's fine. It's good to know. Bit of consistency in my mind, but you know, it wouldn't have surprised me if it went either way now. It was a tough one, right? And to be honest, it didn't really matter because you would have been able to use one of the profiles. Ideally, you don't want to. You don't really want to. You only want to use the prior day, but because there's such a big gap between sort of where the market is right now, and I probably would have merged these 3. So let's say the CVA high was here. It's such a big gap. You know, I would have been keying off some profiles there anyway. So honestly, it wouldn't have made much difference. But look, that is what I did. So at least it's good to know that I did the same thing on the day. But you know, the reason I tell you all of this is because I don't want you to worry if you get slightly different on that one, some grey area, and you think, "No, I'm not convinced." It's okay. In fact, let's have a look at it, and I'll show you why. Because you can clearly see it. Look, get rid of that. Right, you can clearly see value here, here. There isn't much overlap, to be fair. If someone argued with me the case, fine, but it's just because when you merge this and this, it feels to me like it's just filling in that gap. To me, it seems pretty much a range, if I'm honest with you. To me, the market hasn't gone anywhere, and it did. You could see it was filling in that gap. So for me, that was a pretty clear merge. So, like I said, if you didn't, don't worry about it too much. To me, it looks pretty clear, and this is what I say. Look, I've got my bias already pretty much. I'm thinking this market has a good chance of going up anyway. So, you know, if the composites aren't perfect, it really doesn't matter because I probably would be looking to attack some of the levels. But so we've written all this down. DVA is what? Imbalanced. Right? What's happened overnight? Held CVAL. Now, don't forget, this is about 5 in the morning, so I'm not actually going to be trading at this time, but definitely going to be looking for some bullishness coming into the open. What's the condition imbalance? Slow trend, rhythm, sorry. And then we can even put here CVA. That is a decent kind of line in the sand, but we can also use the point of control to help us. Right, so we can probably be looking, you know, to see how the market reacted in that area. I think I did get long of this. Let me just check. What day was it? Can't remember when. 18th. No, it wasn't, was it? It was crude on Monday, and it was E-mini on the 19th. It was a Tuesday, so I can't remember. But I was fairly bullish of this. So honestly, I can't remember how it played out. So I'm just gonna basically get on with it and forward this. But you can see essentially what would the hypo be before I do that. You would be looking at kind of what the market to pull back into here, maybe have some sort of move here. You'd be looking for it to go straight, so that would be your hypo A. You want to pull back B, more aggressive if it starts to go, and then C is a failure. And sorry, I should put these in different colors if I'm honest with you. I'm just being lazy. I apologize about that. Right, so it'd be that and then pulling back. That'd be the ideal scenario. If it doesn't happen, it starts getting aggressive, you get long. If it starts to pull in C, or what you could have here is just in the back of your mind at least be thinking, all right, if we break this, like I told you, I don't necessarily want to be selling this market. So I'm always open to, fine, I fail, I stop out here, but then if we start to build up again, I'm still thinking that in my mind. And that'd be very powerful because these short squeeze, push it up, help the position. So again, just see what happens. Nope, didn't want to work. Speed it up a bit. Just move this out of the way. Let's see if we can jump it. Nope. Just give it a moment. Like I said, always can get a bit clogged up. It's alright, we'll just speed it up using this for now. There you go. You see it popped. It popped, didn't it? Honestly, I had no idea it was going to do that. Total guess. Based on my hypothesis. Right? So powerful, these high time frame. Unfortunately, I ended up jumping forward 2 days. That's okay. Look, it's fine. Just gives us a chance to just give me a second. There we go. Pretty much the whole day was just up. So yeah, the hypo was fine. To be honest, that's it. There really isn't much else to say. It was incredibly bullish, just as per the hypo. And I don't even know why I didn't trade this on Monday, to be honest. I'm surprised because having done the hypo there, I think it's because I was long in oil and, you know, you've seen it's been quite distracting for me recently, obviously putting the calls together and stuff. But really, that's just an excuse. I really don't know why I wasn't in the market on that day, but there you go. Look, the hypo's perfect, incredibly powerful. So let's just move on to the next day. Really. So again, what you'll notice is a lot of the higher time frame stuff, it won't change, right? We're going to move forward to Tuesday now. And I'm going to have to just move this. If I flick this, it's going to go right all the way to the Wednesday. So let's just have a look at Tuesday. Apologies, I did end up, and I don't want to rewind it. When you start rewinding this stuff, it does not like it. It will. Okay, so apologies for that. I've actually managed to get it to work. It was just a little bit clogged up. But literally all I did is I pressed stop, put the date in again, went back, and actually I've got us to Tuesday now from Monday. So Monday's over, which we know. We just had that big rally, which we just hypoed for. We're now on Tuesday, and let's just move forward. There you go, nice, all working fine, perfectly fine. Just get forward again a little bit. Okay, so let's have a look at Tuesday. You know, in terms of, I know Wednesday's already started, but that's okay. Let's have a look. What would we be thinking at the start of the day here on the Tuesday is, let's go through them one by one. What's changed? At this stage, it's kind of a slow trend, isn't it? So at that stage, I would say DVA is very much imbalanced, right? And in fact, as I said, as I showed you at the start of this video, I actually bought this market in size, right, around here at the open. I was buying it, and I'll show you why that is, because if you look at the DVA, fine, it's sold off, but don't forget that's later in the day. This is later in the day. This is where we are, early in the day, and you can see it. Above the VWAP, slow trend, imbalanced, right? That's the rhythm, that's the market condition. Prior value area, look at that. Breakout pullback. So it's changed. We don't need to be careful anymore. Prior value area, breakout pullback. Very bullish market. Right, let's have a look at the monthly. I'll deal with that first. Prior value area, potential breakout pullback the day before it's happened. So now we've actually got breakout pullback on the monthly. Rotation, you know, I was talking about this already, that, you know, potentially we could go and test this area, cause a short squeeze, which is exactly what's happened. So, you know, it's kind of turned, it's going imbalanced, let's be honest. Kind of imbalanced at this stage anyway. Obviously if we came back down, I mean, to be fair, in the morning we were kind of there. I mean, it's not rotational. It's the reason I'm hesitating is basically we want to see some imbalance established, and you can put a note here, not perfectly established but attempting. I mean, to me it's okay, it's a pretty good imbalance. So, you know, just there. What I mean is we haven't spent a lot of time above to really say it's a strong imbalance, but to me, as you're coming in, pretty decent. Quarterly, we already did it. It's the same, like slow trend. We're very bullish from that perspective. This isn't giving us much, maybe that little bit of gap up to the prior value area high, which we've written there. And as I was coming into the open at this stage, right, you're above very much above. Don't forget, we won't merge these because that day is this day, so it hasn't actually finished yet. You know, my DVA would be very much overnight, held CVA high. Rhythm is what? Very rotational. And if I'm looking to get long here, that's perfect. And that's why I bought the market. Because even coming into the open, I just felt like it's tested both standard deviations. This thing is rotational. It's not really imbalanced either way. You know, there's obviously potential for targets up, further up. And then what are we looking at? Market condition rhythm, so that's all good. CVA, clearly, sorry for my handwriting, CVA high, line in the sand, this time it is, you know, we can adjust them, but it's a good line in the sand, let's be honest. About 29.28, breakout value pullback, all lines up, right? Your hypo in the morning is going to be for a pullback and then move up, or it's going to be for an aggressive move up. Put that in a different pen. They're all tied in together. You can see it. They're all tying in together with your composite. You get your move up, right? That'd be your B, and then you see, which I'm not going to draw in a different color. It should really be black. It's something like that. Right. I'm not going to short this market in a million years. Okay, that's D. Actually A, isn't it? Be A hypo there. A, B, C. Apologies, this is what happens when it's 2 in the morning. That's a C hypo. Alright, ABC, very clear, very, very clear. There, look at the stop run, clear stop run. There in the delta, so you could even, I guess at that stage you wouldn't know, but you know, if you were doing your contextual log in your journal, you could write this down. 10 a.m. noticed some weak participation in the stop run, and then I can't remember where I think I actually got long in here. Let me have a look. Let's have a look. So many trades this week. Yeah, that's right, about 29.38. Right, so you can see it there, 29.38. About 4 contracts, so that was pretty decent. Yeah, it was there, wasn't it? Says around there. Yeah, so I was playing the rotation, really. You can see it, it's clear in the hypothesis. That was my hypo, was to just test the other side. So, you know, I was pretty happy to obviously try that there. So, to me, that was a pretty clear trade. In fact, you know, if only every day was that clear. I thought that was very clear. So that's Tuesday. Let's just quickly finish off the last 3 days. Don't forget the high time frames, they're just not going to change much now. In particular, obviously the yearly won't change. The quarterly is going to pretty much be in this slow trend unless we have a dramatic event occurring, but it's unlikely. Okay, so it took a while there, so I just obviously trimmed the video down. Let's do it again. There we go. Just doesn't like it when I take big pauses between me jumping 12 hours. It's not a big deal. So you can see here at the start of this day, very much coming into slow trend. Nothing's changed here in the quarterly. In fact, yeah, it's just in line with what we've got here. Slow trend. You know, this sort of return to value pullback potential for the prior value area. It's really just perfect. Monthly is very much imbalanced at this point. Right, we've bounced off the normal trend. We've come up. It just looks very, very bullish. And then finally, the only thing where I would maybe make some change is I would say that, do you remember we had that sell-off towards the end of the day before? We were talking about it. That one, that sell-off, look, it rejected and it came back up. And in fact, I'll show you. You'll see it clearly. Let's do the merge. Pull that up. Okay. So you can see the sell-off rejected. Then we came up into this area overnight into the previous CVA. So what I would do is I would just make an adjustment in my... Now you can write these out every day. Obviously, you know, and with obviously taking time into account, and I've already taken a long time to do this video. It takes 3 hours sometimes to do these hypos, even for a week. You can see because I'm going into incredible detail, you know, and I hope you can see. I know it's a lot to take in, but you're not going to get this level of detail from an institutional level anywhere else. So, you know, you'll have to forgive me for going into so much detail, but the trade-off is that, you know, obviously I'm having to just make adjustments, whereas when you're doing it every day, write these out, right? Don't use the same piece of paper, write them out again, get the practice in, developing them from scratch. It's just for me, obviously in the interest of time, I'm just making minor adjustments to them. And it makes sense to do that anyway, because look, we had the slow trend environment, we tried to go rotational and it's failed, right? And we've gone back into the slow trend environment. It rejected the rotation. That's very bullish, right? So that's what I would put here. I would change it. I would say rotation failed, potential normal trend. Okay, so that's very bullish. Everything else is really the same. So you just want to be buying this market, right? I mean, DVA, look, overnight, what's happened? Rejected, rejected, rejected CVA. Low, because don't forget you're coming here. So it's rejected this, it's rejected that. You can number these 1 or 2 or whatever. So that's overnight. And then what's the sort of market condition? Imbalanced. Rhythm is very much a normal trend. Beautiful normal trend. Balanced. Normal trend. And then CVA is really, you're looking for it to break out, isn't it? You're here, you're looking for this to break out, value pullback. Very clear. You want this to break out. So, you know, plenty of opportunities to take trades along with positive delta. You could even make a note if you wanted about delta being positive there. So to me, that was just pretty easy day, straightforward day. Go into a trend day, you know, possible OTF in the market, look for some expansion. Obviously, I don't know how much it went up, but I think I was in crude, wasn't I? I was in long crude in this day, so yeah, it just wasn't. Obviously, I had a lot of this stuff going on with the filming and that, so I didn't really want to load up in both markets. I took one, but really that's an excuse. I should have been buying this market as well, to be honest, but I didn't. Okay, so it just loaded that. That's fine. I'm now going to skip Thursday, fast forward on Thursday, and let's just see what happened. Okay, so look, it's getting clogged up, to be honest, a little bit, and I think that's because I've been doing the crude, I've been doing the ES, I've basically probably over exhausted the thing, and yeah, it just needs, I need to basically shut it down and start again. So rather than do that, what I've done is I've managed to just get it to skip forward, and it's absolutely fine. For the purposes of what we're trying to do, it's absolutely fine. It's not going to make any difference. So what we've actually got here is the final day that I'm going to go through with you is just look, because what it is we came in, and on Friday we just had a very rotational day in here. So I'm not going to bother going over that. There was nothing happened. It was just a very rotational day. So I'm going to just literally finish by focusing on this final day, which was the Thursday, and I'll show you where that was. And again, look, this is the point. The reason I'm doing it this way is to show you that on the higher time frames, nothing's really changed. All right, so we're coming in into the morning. Look here, the quarterly, nothing's changed. All right, the monthly, nothing's changed. You're still very bullish, imbalanced, breakout of value pullback. You know, you want to be getting long of this market. And then on the weekly, yeah, let's just have a look where we were at the time. There, in that, just holding the VWAP, right, in a sort of rotational environment, but we held the VWAP, all right? So you would be, I think, pretty bullish in this scenario. So here we've put rotation failed. Don't forget, you know, the reason I've got this long bias on the weekly is because of the static value. All right, you're above the static value. So, you know, I would be very inclined to be bullish in this market, even with the rotation holding the VWAP, or you can be neutral, it's fine. But at the end of the day, everything else is pointing upwards. So even if the weekly is like kind of neutral, it's not really telling you not to get long, right? It's not like we've tested the 2SD, we're at some sort of extreme. No. You know, at the end of the day, you've built decent value, maybe 5-10 minutes into the session. I would definitely have a pullback and going up as my hypo A. Let's get rid of that. Hypo B is going to be more aggressive longs, and then hypo C would be. So you can see this is quite a nice day because it's one of those days where everything is just kind of aligned. You know, you come in, DVA, overnight, potential rejection of CVA high. Right, and what are we doing? CVA, potential CVA high, breakout of value pullback, right? As you sort of build some value in there. You know, it's just all lined up, basically. Everything is lined up. Maybe the weekly, you could argue, but it's holding the VWAP, all right? It's just all lined up. Now, granted, this happened later in the day, but, you know, this is a long, all day long. I hope you can see that. It's very, very clear. You want to be buying the market. You know, I'm not saying that you wouldn't get stopped out of like your last position as you're you know, holding it, because obviously you would have got scales in here, but the reality is I just can't think of any reason why you would want to short this market. It's so clear, right? Obviously this we know is rotational here. Look, it's just basically a long, all day long, everything's long. This is rotational, but holding the VWAP at the time. There's just no reason to short the market. So look, that's basically, I think I've given you a lot of higher time frame stuff. And look, it's by no means the last, okay? I'll obviously be doing sort of sessions, and I'll put the recordings in there. You can watch the recordings for plenty more examples. This is just to get you started. Do this before you really get throw yourself into the sim. Obviously do it on sim, but don't be thinking all the time, oh, I need to make money for the next couple of months whilst you're just building your hypo set out, getting used to things and so on and so forth. So look, I hope that was useful. I know it's quite a long session, and believe me, I feel it as well because I've been sitting in this chair, and you know, that's why I'm going to call it a day now with obviously all of this. But yeah, again, what I said before, being really brilliant, showing you all the stuff. Really grateful that I was given the opportunity. I hope it's helpful. Again, any questions or anything, let me know. Otherwise, like I said, there will be videos and stuff, extra supplementary stuff that I'll put in just over time. You know, it's an evolving thing. So, been fantastic. And look, have a sort of wonderful next 2 3 months developing your understanding. Obviously, jumping on the Discord and so on and so forth, or wherever we are at the time. And yeah, share your hypos, etc., etc. And I wish you all the best. Thank you.